Hi, how's it going everyone? My name is Henk and welcome back to the channel. In this video, we'll be taking a look at Reikon Limited. Now their share price has been up by almost 150% over the past 3 months. So we'll take a look at what happened in the company and potential reasons for this giant increase in share price, whether or not this is a good investment option for you. Reikon was first founded in 1967 in New Zealand. They are a technology company that makes frequency control unit. They are these tiny chips that you can find in mobile phones and other telecommunication devices. Now their core range of products include these crystal oscillators, which produce a steady frequency for telecommunication and GPS signals. So they manufacture a key component for modern day communications. Their products were also used in space defense with 2 of their components on board the 2020 Mars Perseverance rover. Those components are not the only ones that Reikon currently have used in the space exploration. They also have products on board Europe's Mars Express launch in 2003 and the Mars Orbiter mission spacecraft launched from India in 2013. These days, they are a multinational company with offices in Europe, China, and India. Let's look at the revenues for Reikon Limited. So the revenue grew by 4.38% for the full year in 2020 compared to 2019 to a total of 118.98 million. And their net income grew by 18.3% to 3.98 million. As we can see, their revenue has been in a consistent uptrend, and they have been slowly growing their net earnings. In their most recent half-year report in November of 2020, their revenue is up by 2.6 million, with the first quarter down due to the disease that's been going around, and the second quarter up, driven by strong performance in the telecommunications sector. Now, their net profit is up by 3.3 million, from 1.3 million to 4.6 million. And their earnings before tax is up by 4.5 million. Now, the 3.3 million net profit does come with a slight caveat. If I actually take a look at where the profit is actually coming from, 2.3 million of the $4.6 million in profit actually came from the government relief subsidies. So their actual net profit is lower than expected. Let's go back to Yahoo Finance and have a look at the PE ratio and returns on equity for Reikon Limited. So they have a PE ratio of 28.71. Which is a bit higher than the average New Zealand market of around 25, which means that they could be considered slightly overpriced. In terms of management effectiveness, they have a return on equity of 7.63%, which is quite low when it comes to a company. However, they do have a quarterly earnings growth year on year of more than 240%, which is very good because they have been significantly increasing their earnings. Reikon currently do not pay a dividend, which means that they may potentially still be looking to invest more of their earnings back into the company. Let's now try do an estimate for the intrinsic value calculation for Reikon Limited. So I've entered in the stock name, which automatically populates with the stock price and earnings per share for Reikon Limited. So their stock price is around $0.9 per share, and the earnings per share is around $0.03 per share. Now here we can look up their estimated growth rate on Yahoo Finance. So if we scroll down to their growth estimate, so for the next 5 years, they have a growth estimate of around 30%. So we enter into the spreadsheet 30% growth estimate. So rate of return that we're looking for is around 15% with a margin of safety of around 30%. Here, I don't want to use the PE ratio to estimate the intrinsic value. I want to use the discounted cash flow analysis. So what we need here is the weighted cost of capital for Reikon Limited. In order to find that, I searched online for the estimated WACC value for Reikon, and I picked the mid number of 10% to use as our WACC value. Next thing that we need here is shares outstanding in terms of thousands. Here we go back into Yahoo Finance, and we can look up the number of shares outstanding in the financials page. So there's 229 million shares outstanding. And because the spreadsheet is organized into thousands, we need to add 3 zeros after that. So we come up with 229,000 shares outstanding. Final thing that we need is the cash flow for our discounted cash flow analysis. So here we go back into Yahoo Finance and look up the financials page and look up the cash flow. So the cash flow that I want to use here is the free cash flow that they have reported for the last full year of operations. So all the numbers here are in terms of thousands. So the free cash flow is 4,874 in terms of thousands. So because the spreadsheet is organized in thousands as well, I can simply copy that number and paste that number into the spreadsheet. From the spreadsheet itself, I came up with a fair value for Reikon Limited of around $0.85. This is slightly lower than the current stock price of around $0.9. But if we apply the fair value with a margin of safety, you'll probably be looking to purchase Reikon at $0.6 per share. Again, like any analysis, discounted cash flow analysis should be taken with a grain of salt, but it gives you a very rough estimate of the fair value of the particular company stock that you may be looking to purchase. In January of 2021, Reikon released an update in terms of guidance for the company. Reikon expects to achieve an earnings before tax of around 20 million to 22 million, and this is significantly more than their earnings before tax of 14.8 million for the previous period. And this is an update, increase to their previous guidance for the year of 2021 of 16 million to 18 million. So they went from 16 million to 18 million estimate to 20 million to 22 million. Now, globally, due to the continuous rollout of 5G network, there is a greater demand for Reikon products. Now, there also is a increased demand due to supplies shortages caused by the October fire at the AKM factory in Japan. I wanted to look up how serious this AKM factory is in Japan and how it might affect the supply chains. So I found this article that basically says that AKM factory fire is a pro-audio industry disaster. So the fire lasted for 3 days, and it has really did a huge amount of damage onto the factory production facilities. Apparently, a section of walls and the roof had collapsed, and another fire broke out 2 days later after the initial fire. The fire was finally extinguished a full 82 hours after it began, and the entire factory is now offline. And there's minimum 6 months expected for production to be restored. Reikon is meeting some of this shortfall in supplies due to its good inventory levels. So they are poised to have a fairly steady growth for the next couple of years. However, do keep in mind that semiconductors and semiconductor manufacturing is usually a very cyclic industry, which means that it often runs with a few years of high, with an increase in demand for new products, followed by a low when the product is saturated on the market. So for example, this is Micron Technology, one of the biggest semiconductor manufacturing in USA. So they had highs and then they had lows for a long time, and currently they're reaching their highs again. So do not be surprised that if there's downturns in Reikon when the market becomes more saturated. So overall, Reikon, a very good company in the short to medium term that may potentially face some downturns in the long term due to market saturation. And that's it for the quick review on Reikon, and I will see you in the next video. Peace.